Welcome back to Upside Down Data. Let's talk about Bitcoin and whether or not we should be worried by its recent price action. So if you've been watching the markets, you probably noticed that yesterday, as I record this, so yesterday was the 2nd of April, was a bloody day in crypto. Bitcoin fell by just over 6% and a lot of altcoins fell as well. So this scared a lot of people. They saw that Bitcoin had tried to get back up to the highs that we put in over here in March and failed, and then we got rejected. And I think what a lot of people are worried about is something like this playing out. If we go back to 2019, we had this very aggressive move up from the lows. We didn't get up to prior all-time highs. That's one difference, obviously. But we went up, we set in a decent high here, but then we kind of put in lower highs, and we actually ended up going into this downtrend that, of course, culminated with the big March 2020 collapse, which then ultimately led into the big bull run. So I think what a lot of people are looking at is that we went up very aggressively. We've now bumped our head. We did it once, we did it twice, and we actually set in a lower high. Are we now doomed to have to go down, down, down? So I think these are interesting questions. I want to talk about some of our data that put them into perspective and tell us, should we really be worried about this, or might this just be a normal development in a broader bull market? So let's go ahead and get into it. So one of the first things I wanted to talk about is actually something I posted about over on X yesterday, and that was a look at the DXY-based fair value model that I had built, and hopefully we'll have up on our website, clardigital.io, before too long. But really what this model is doing is it's leveraging the fact that the DXY and Bitcoin have this pretty robust inverse correlation with each other. If you know what the DXY is doing, it gives you a pretty good sense of where Bitcoin should be. And historically, it's given us a very nice idea when Bitcoin has been undervalued, then it tends to rally up into that fair value, as well as when it's overvalued and it tends to trade down towards fair value. And this was really useful, especially in this last cycle, as you can see, but also last year. That one of the reasons why I was so bullish on Bitcoin, amongst a number of them, was that this model I was seeing was consistently showing that we were very much below fair value. And I talked about this a lot during that time. So Bitcoin rallied up to meet it. But then as we've kind of gone through this rally here, we've kind of been more or less in step with fair value. We got above it, then we were below it, then we rallied back up into it. But then Bitcoin then again got overvalued more recently. So when we look at this recent price action where Bitcoin's showing weakness and not showing an ability to just keep on pumping up, 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 in some ways that makes sense because we'd get more and more stretched away from fair value if that were to happen. Now that can be the case when Bitcoin goes into these big bubbles and get way extended from fair value, but it tends not to last super long before we have to come back down to it. So in fact, for a healthier market dynamic, I'd actually like to see Bitcoin stay nearer to its DXY fair value. So I actually think it's a healthy sign in some ways that Bitcoin is consolidating here. We'd like to see it stay more in lockstep with fair value, not get very overextended from it, because that tends to lead into these big crashes that we see. So this was one data point that I was looking at that suggested that it's not totally unreasonable for us to be seeing Bitcoin having to take a break here, and that we're having to see it, consolidate, maybe even have to correct, come back down to fair value. Totally reasonable and healthy in my opinion. Another model we can look at to give us some useful insight in terms of the shorter term dynamics for Bitcoin is our short-term upside downside potential indicator, or UDPI. So this is one of our risk models that we have here at the channel and at our website, clardigital.io. Link is in the description if you want to check that out. And basically higher values mean higher risk, lower values mean lower risk. And this model cares about moves that play out over days to weeks, so shorter in its time horizon. And one of the things you'll notice has happened more recently is that we had gotten pretty extended on short-term risk, all the way up at 2.24. The top of the scale is 5, so we're getting pretty high up there. And now we started moving back down. Now the bottom of the scale is -5, and so we've moved down below neutral. So 0 is kind of neutral. That means that the upside potential and the downside potential that are plausible are relatively equal. And we're now at a point where the relative upside potential is probably better or more plausible upside potential than downside potential right now. And this is a totally normal dynamic in a bull market. You'll notice that in bull markets, we'll have these times where short-term risk really shoots up. We then come down and cool off. We go back up, we cool off a bit before we might go into a bigger run. Same thing here. We actually went all the way up to 4, above 4 here, cooled way off, and then had this room to move back up into this big rounded top over here. Similar thing with what happened in the late 2021. Big move up, cooled off, another big move up before we ended up going into the bear market. So oftentimes in bull markets, you'll have this happen where you realize a lot of short-term upside potential, see it cool off, but that just gives room for it to move up again. And that's all part of a bigger, broader move. So I'm not super concerned at this point. Now, obviously, it doesn't rule out the possibility of something more like this happening, but even a 2019 type of situation wouldn't be too concerning if ultimately it's in service of a bigger run up. So on the short term, I don't think there's anything we're seeing here that suggests that that would have to happen, or that this would suggest that we've hit some notable top that'll put us into some horrible protracted bear market, for example, like we saw in 2022. What I'm seeing is so far is pretty normal bull market dynamics. Another model we can look at that gives useful information is our momentum bias indicator, or MBI. So this model cares all about momentum, as the name suggests. Is the momentum biased to the upside? Is positive momentum constantly winning out and pushing price higher and higher and higher overall? Or is there downside momentum bias, where really it's the negative momentum that's dominating and pushes us down, down, down into a bear market? And the nice thing about this model is there's very particular types of behavior the MBI shows in different parts of the market cycle. So as you'd expect in a bull market, it spends a lot more time in the green than in the red, really building up into these big blow off top type moments. And in a bear market, it spends a lot more time in the red than in the green, really pulling price down. But then more recently, what we've seen is this kind of oscillation around zero. And you see this in the transition out of a bear market into a bull market. Every single time you'll see this oscillation before you build up into that bull market. And that's really what we saw all of 2023. And I was talking about this at the time. And what seems like might be happening now is a transition into this more full-throated bull market type of behavior. But even in that type of behavior, you will see these notable pullbacks, these notable drawdowns. So that's where even if we do see Bitcoin continue to show weakness and actually correct further, it would not be totally surprising. It would very much be in step with what we've seen historically speaking, where we have to go in these rallies, but then you see these pullbacks. And what that might manifest on the MBI is dipping back down here below zero, kind of what we did here, this big push up in November 2023. We then had to come back down and dip into the reds, but then we shot back up, and we might again expect that to happen. This would be very normal bull market dynamic, again, as I've been saying. And really where I'd be looking to be more concerned is if we got really extended on momentum bias. That tends to suggest an unsustainable market dynamic where we're getting really ahead of ourselves. There's probably not going to be enough demand to really come up and sustain those price levels, which then ultimately leads into these big crashes, which can lead into bigger bear markets. I don't think we're necessarily there. Certainly one possibility, though, is like in 2019, you'll see the momentum bias has gotten to a similar level. So it's not impossible that we see a longer period of cooling off. But if that's all in service of a broader bull market, again, that might not be all that concerning. Now, one piece of data that we should look at and keep in mind when we're thinking about where we might be going is our long-term upside downside potential indicator, which might give a little bit more of a concerning sign of where we are right now. So this cares about moves that play out over months to multiple months. And what you'll notice is that it got quite extended here, 2.32, really levels we have not seen in a long time. Really only the tops of bull markets or these intermediate tops that we see in prior bull markets, or here in this later top that we saw in 2021. So when you're looking at coming up to these levels and starting to struggle at them, it certainly is concerning historically speaking, because 2019, we had this big drawdown, 2013 had a big drawdown, but those were both in service of this bigger move up. Now, the more concerning thing from this, the one historical example of a thing that might suggest we're going to a bear market, is what happened in 2021. Though obviously a difference here is that we never got to these super high risk levels that we got in every prior cycle before going into a bear market. So this would be a difference if we went up here and then suddenly went into a bear market from here. That would be a little bit unusual, but certainly anything's possible. But I think what this does suggest, no matter what, regardless if we have to have a more painful correction or if this is a shorter term correction in the middle of a bull market, is that I do think we do need to see risk cool off here to think that we can have a really sustainable longer term bull market in front of us. One of the things I was really concerned about with this push up was how high risk was getting this quickly, and that if we ended up going back up to these really high risk levels, it might suggest that the market would have burned itself out early, and that we actually might not be able to hit some of those higher end targets people have for Bitcoin, you know, above 100K, above 200K, for example, if we just go up to those really high risk levels really quickly. That might suggest that we're getting ahead of ourselves and we actually might have a lot more pain before a next cycle to push us up to those higher levels can actually start. So in some ways, I'm actually quite happy to see risk topping out here. It seems like we are starting to put in a top on long-term risk right here, and to see this start to come down. I like to see this reset deeply here before that next leg up that might actually take us to 100K plus if that's in the cards for this bull market. Now, what that might mean is that there's some pain in front of us. So we might need to spend some time consolidating, even correcting to let risk cool off more deeply. Now, that doesn't mean we necessarily have to go for this long of a correction like we saw, for example, in 2019 or here in 2013. But there could be some boring times ahead of us. There might be kind of a summer boringness, which tends to happen in markets in general. Summer tends to be a quieter time. Maybe that happens again here for Bitcoin. We just kind of chop around, maybe even come back down to lower levels. But if all that is in service of a bigger, stronger push up that can actually take us to some of these higher levels people have been hoping for a really long time, I would personally not see that as being a particularly bearish thing. It might just be in the short term, there's some pain ahead of us. And in some ways that wouldn't be surprising. A lot of altcoins also have gotten very high on their risk level, and we really haven't seen a longer term or broader, deeper pullback across the crypto space in quite a while. So it would not surprise me to see something like that play out. Short term might feel painful. Short term might lead to some unrealized losses. But again, if that's in service of a broader move up into a bull market, it would not be especially concerning or bearish in my personal opinion. So that's what I'm seeing. I don't think it's necessarily the case that we have to see that broader term pullback, but I do think that the data would be consistent with that. That we tend to see these pullbacks in bull markets. We see short-term risk resetting here. We'd like to see long-term risk follow it. And with momentum, we tend to see these waves where even in the hottest parts of bull markets, you'll see these pretty big corrections back down into the red. So it would not surprise me for that to happen again. A deeper pullback into the red. Let risk reset, let short-term risk reset maybe even more down to lower levels down here. And then also long-term risk, really let that cool down to lower levels that can set the stage for a more enduring or sustainable push up to maybe what ultimately will become the cycle top. So I'll have to see how this plays out. Obviously, nothing is guaranteed, but the conditions are certainly there for that to happen. And so if we do see that happening, I think there's going to be a lot of fear in the market. A lot of people are going to panic. They're going to say, that's it. This was the top for this cycle. It was a very short-lived cycle. Maybe even people would call it just a overextended dead cat bounce in this bear market into something that goes deeper and deeper. You're going to see a lot of fear in that kind of situation if we have lower prices. I personally think that that is premature, and that what we might see in that type of situation could be just normal bull market behavior, a deeper pullback that could catalyze a move further up. Now, obviously, if the data change and the data turn bearish in the longer term, that would be something that I would then update my views about. But so far, I think it's way too early to be that concerned. And frankly, it's not impossible for Bitcoin just to shrug this off and before too long just continue on its merry way to the upside. That's entirely possible that that could happen. But for healthier dynamics, I'd actually like to see a pullback here. I'd like to see long-term risk cool off. I'd like to see us come back and dip below zero on the MBI. I'd like to see short-term risk be able to continue to cool off. And that might just suggest better and better conditions for us to move up, especially if we can keep in lockstep with fair value. All right, so like the content, or subscribe to the channel, give the video a like and follow us over on X. A lot of updates for models and more over there. And go to our website, partydigital.io, to see live data from our models and more.